Hello and welcome back to your South King County real estate update. My name is Sarah Eggleston with Stone Egg Realty at John L. Scott, and I am back to deliver your local real estate news for the week. There is a ton to get into today, so I'll go ahead and jump right on into these slides. So today is October 14th, 2022, and let's find out what's happened this week. So the Mariners did lose their second game, unfortunately, in the playoffs. So we are headed into game 3 tomorrow at 1:07. If the Mariners win this game, they do get to continue on. If they lose, the Astros get to continue on. They get to continue on. Mariners, if they win tomorrow, get to continue on this 5-game series. So they'll be playing Sunday and Monday if they win tomorrow, or at least Sunday. And if they do play Sunday, the Seahawks will reschedule their games. So kickoff would be rescheduled to 2:30 from 1:05 if the Seahawks play on Sunday. If not, they'll be playing at the 1:05. So happy Blue Friday. I got my colors on. I hope you do too. Unfortunately, the Seahawks did take away a loss last week. Hopefully they can turn that around against the Cardinals. Sorry. What happened this week? So this week, there has been a little bit of a stalling with the listing that I was talking about coming on the market. We had a meeting and came to a disagreement about price. So we are re-meeting coming up, but this is a very common thing in today's market. There's a lot of real estate agents that are suggesting prices to sellers, giving them options like, if you list at this price, this is what we can expect to happen. If we list at this price, this is what we can expect to happen. There's been a lot of pushback on price from sellers across the industry. I'm sure Washington State is not on its own because this is kind of a nationwide thing. Sellers have seen what their neighbors' homes have sold for in the last couple of years, especially this year, earlier in the year, and think that their home is basically, my neighbor's house sold for this, so why shouldn't mine? But the fact is the market has really adjusted in favor of the buyers at this point. So there's just a lot of nuances going on. There's the homes that are selling quickly and close to list price are those that are priced appropriately and presented appropriately. There's any repairs are taken care of. They're staged, decluttered. The pictures are beautiful. Those homes are still selling super fast. So if you are looking at possibly selling your home and moving to a different one, so selling and then buying, it is always okay to sell and buy within the same market timing because you're kind of you're selling and buying at an even plane. If you're looking to sell right now and move into a renting situation or move out of state where the market is different, I mean, everybody's situation is different. So you have to talk to a real estate agent and figure out what's right for you at this time. But most of the people that are selling their homes right now are people that need to. They're people that got jobs in other states or need to go be with family members in other areas. Most people aren't selling just because they want to move right now. But like I said, it's always okay to buy and sell within the same market timing because you're moving across similar market. If it's a harder time to sell, it's an easier time to buy. So that is kind of washes things out if you're making a move. We'll go ahead and jump back on into these slides. This was from the Seattle Business Journal. Seattle area homebuyers get some relief as supply soars and sales decline. So this is exactly what I was just saying. Buyers are having a little bit of a resurgence right now on their market ability because while interest rates are going up, home prices are coming down. So there is a lot more inventory on the market than there has been for a while. And buyers are getting some relief. Getting back to a balanced, more normal market is almost a welcome change. Inflation and rising interest rates aren't helping. It's a little give and take. The whole reason that we had buyer demand pull back was rising interest rates. People's affordability went down. A lot of people got pushed out of the market or down into a price range that they didn't want to be shopping in. Unfortunately, those people are deciding to step out of the market. But fortunately for the rest of you buyers that want to continue in, that means that home prices are headed downward a little bit. So, I mean, things went up so crazy high in January and February. It was insane. So this is a welcome relief, and it's really just a correction in the market as far as pricing is concerned. Seattle jumps to 4th highest household income among large metros. So there's some areas in the country where home prices went up like crazy, but the incomes didn't keep up. So a lot of people that moved there would be working remotely. So the incomes in the area didn't support the prices that the houses went up to. However, here in the greater Seattle area, in Seattle, the median household income hit $110,000 per year for the entire metro area outside of Seattle and in Seattle. We have $101,700 for the average household income per year. So that is up 8.2% since 2019. Unfortunately, the 2020 results didn't ever get issued because of the pandemic, but we are comparing 2019 to 2021 in these numbers here. And household income includes all contributions to the household. So people ages 15 and older working, if there's any interest, dividends, any income, this is figured out in here. So Seattle ranked 4th out of the large metro areas. Median household income in 2019 was $94,000. And then for 2021, we're almost at 102. So we had an 8.2% increase. Unfortunately, that didn't keep up with inflation, but we are doing a lot better than some other cities in our nation. Tumbling housing markets nationwide signal upcoming recession. I thought this article was very telling. It's out of Atlanta. It was actually published in Colorado and then put through to the Seattle Times. So I thought it was interesting the path that this took, and that they, on the next page, they call Seattle out. So I thought it was just a Seattle article when I was reading through, and then I saw the Atlanta and Colorado in there, and I was, wow, they're calling the greater Seattle area out in this national article. Interesting. But the housing market is cooling across the country. And the chief economist for this National Association of Home Builders said that their take is that the economy is in a recession. We've had decreasing output for our economy for a while. It's been long enough to consider us in a recession, but apparently there's some people that still don't consider us in a recession. I don't know how they can, because all the numbers say that we are. However, housing tends to slow quicker. It tends to be one of the leading indicators in a recession, but rebound quicker. So it also is one of the leading indicators that we're coming out of a recession. So if we do head further into this recession, we can assume that housing will regain its value ahead of a lot of the other investment commodities available right now. Right now, the 30-year mortgage rates are, well, they're over 7%, but that is causing demand to fall pretty significantly. In the Seattle area counties, home prices ticked down 2 to 3% in September compared to August, which were up 6 to 9% from last year. At this time last year, prices were up 10 to 19% year over year. So we do these year-to-year comparisons. And if last year was incredibly strong compared to the year before, it looks really crazy good. But then the next year doesn't look as good. So last year was really strong for home price growth. This year, not so much. So we are ticking down. But I really don't think this price correction will last very long. Everyone has a different prediction of when things will rebound. I talked to a lender yesterday who thinks things will rebound by the end of the year. I'm not quite that optimistic. I think it'll be second or third quarter of next year that things will really start to rebound and interest rates will drop and we'll start to see the economy chug along like normal again. And there's other people that are even more pessimistic than me that think it'll be out a year and a half. But pretty much everybody thinks that we'll make a recovery within the 2-year mark. The construction sector isn't expected to suffer as much as some other sectors in the housing industry. They're looking at an expected decline of 14% this year. So we will see homes still being built, which is a fantastic sign because we need more homes. This is from the National Association of Realtors, Lawrence Yoon, the chief economist there. Instant reaction to inflation, October 13th, 2022. In September, consumer prices rose by 8.2%, which is very much not what we would like to see. We would like to see this inflation number greatly reduced in order to get the Fed to agree to not raise rates going forward. But rents rose by 7.2% year over year. So that is also pretty significant. When you buy a home, you lock in your rate. But if you're renting, a landlord can raise your rent every year and probably will. I have never had a rent go in the opposite direction. Every year, when I was renting, it would either stay the same or increase. There was never a decrease in rent in my life. And rents are accelerating to higher figures with each passing month. In January, rents rose 3.6% for the annualized rate. And now they're at 10.6% for the annualized rate, which is the monthly change times 12. So if you continued at the same rate per year, what it would be. 3.6 to 10.6 is a pretty huge increase. So I'm sorry for you people that are renting and have to renew your lease. Please reach out to me if you are interested in getting out of renting and getting into a mortgage that's locked in at a rate. And if it goes down, it's by your choice when you refinance. Even with an economic recession looming, the Federal Reserve is unlikely to let up in its aggressive monetary policy of raising interest rates. The 10-year Treasury yield broke past 4% this morning, and mortgage rates will be fighting to hold at a 7% average in the coming weeks. Mortgage interest rates follow the 10-year Treasury pretty closely. They don't actually follow the Fed funds rate. They follow the 10-year Treasury, which the Fed funds rate plays a role, but not getting into that right now. Basically, the Fed is not going to stop raising rates until they see some sort of tangible measure that inflation is significantly decreasing. This is from Alan Pope and Associates. This chart is showed pretty often when I am talking to people about stats. The red line is net pending sales and the blue line is inventory. And you can see in May to June, we did cross over and have more inventory than pending sales. And our pending sales did tick off pretty significantly this month. I did predict that in August, we would see an increase and a decrease in September because August interest rates decreased on average for the whole month. So we saw a whole bunch more people jump into the market and grab those lower interest rates while they're around. September, we hit like 7% pretty early, and that's really curbed our net pending sales. This is the past year of mortgage rates, and you can see in August how low it was, and then by September, it jumped back over 6% and reached 7% about halfway through September. So this is exactly what's going on affecting that buyer demand. Our showing traffic has ticked down slightly, but honestly remaining pretty strong throughout North America. And that brings us to our local market stat minute. We had 687 new listings, 626 pendings, and 546 sold in King County in the last 7 days. So ticking down on all three of those measures, but look at our list price reduced. The third line down, that kind of reddish bar there, 740 listings reduced their price. So these are sellers that are realized that they priced too high. They want to sell their home, so they lowered their price. And that is far outweighing the new listings in King County. And if we bring it to our local breakouts, I was kind of remarking at the fact that all these are structured so differently. Renton had very few new listings compared to the reduced price and pending. Kent had few new listings compared to the reduced price, but about the same on pending. Federal Way had more new listings than reduced price or pending. although the reduced price is pretty close. Auburn had fewer new listings than both the reduced price and pending listings, but a much narrower margin than Renton. This shows how area specific your home search is. You have to know the market and the area you're looking. If you're looking in multiple areas, be aware of what's happening in those areas compared to each other. You might be able to get more of a deal in one area than another, just based on what's happening in the market real time in that area. We do have our monthly recaps from J. Lennox Scott, Chairman and CEO at John L. Scott. And overall, we still have strong buyer intensity and a shortage of supply if we look at our total overall. Once we reach 1 million and above, we're in a healthy market. It's been such a strong seller's market for so long that it's nice to see strong and healthy on this little chart here as far as the sales activity intensity. Really, we have reached a point where buyers have a lot more negotiation power with sellers. In the lower price points, not quite as much. There's a lot more people in those lower price points. Maybe they were shopping above and got pushed to a lower price point, but anything under 350K is still going pretty fast. And last week for our weekly average mortgage rate, we had 6.66, but our daily rate last Friday was 7.12. If we bring it to today, our weekly average is 6.92, so still under 7 according to the weekly average mortgage rate. But with inflation, we can expect that to go up. And if we bring it to today's interest rate is 7.16. So that is up from yesterday and from the beginning of the week. And just a reminder, I do have my fall buyer and seller guides available. Let me know if you are interested in buying or selling a home this year. If you want to make a move, please reach out. I would love to have a conversation with you and send you one of these guides. This information is just so relevant that I can't convey how much this will help your home search if you know the kind of market you're dealing with. Next Tuesday, this coming Tuesday, October 18th from 6 to 7, I'm hosting a little home buyer happy hour at Jules May's Saloon on Airport Way in Seattle. Come on out and see me. It's totally free. I cannot stress how important it is to know what's happening in the market. And if you think that you've probably been pushed out of buying a home because the interest rate's rising and all of the things that are pushing you against buying a home, please come to this class and ask questions. We'll show you so many different options. Did you know that there's still options out there to get a rate under 5%? There are options for the right individual, and everybody's case is different. So please come out. I would love to share this valuable information with you. If you have questions, please feel free to reach out. I would be happy to have a conversation with you about the market in your area or an area you're interested in, or just the general process of everything. Please reach out. Thank you so much for joining me today. I will be back here next Friday at 3 p.m. with your local real estate news. And until then, have a fantastic week. Go Mariners, go Hawks, and we'll see you back here next Friday. Have a good one.